Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 1 minute past midday, super punctual today, making it exactly the same time, UTC. A really big shout out to everybody watching this live, as well as everybody watching this on recording. A very, very happy and prosperous new year to anybody that didn't make the earlier shows. And yeah, can't believe we're kind of 12 days into the new year already. Yeah. Yes, Jack. Yes, as our Polish friends say, it is what it is. Time flies when you're having fun, and there's no doubt that there's been a lot to sink our teeth into in these markets. So I'm not going to mess around. We're going to crack on with it. Going to make a lot of time to cover some charts today. If you've got any requests, do let me know. We're going to make some time for that towards the end. And as always, if you are here, please do feel free to say hello in the comments, to share some ideas, to ask for some charts. I'll do my absolute very best. Miguel Sanchez, my friend, how are you? Good to see you, and everybody else that's here with us today. So anyway, before I ramble on too much, let's get stuck into it, all right? A few bits and pieces I want to cover. So we want to start with the news today. Monday, January the 12th, we have a very benign start to the week. Oh, really? Say hey when 100K, my friend. Great to have you live, mate. Great to have you. Monday, very, very quiet. No major news. Very rarely we get major kind of economic news releases. For anybody who's maybe not aware, we're looking at high impact news events that come out focusing on the US market. US market, largest market in the world, biggest catalyst for other markets, and the dollar is the world's reserve currency, all right? So that's what we're using as our barometer. And as we can see, as we head in this week, it's tomorrow things really start to kind of ramp up. Tentative, we're still obviously playing this day to catch up at the moment. ADP weekly employment change. Now, looking to last week, what threw the cat amongst the pigeons last week was the fact that we had a real mixed bag. Unemployment data came in strong, NFP came in weak, the market's kind of moving back and forth. The reason for that is because the Fed are looking quite heavily at the employment data at the moment, and there's been, a doubling down, if you want, in the terms of their rhetoric, their narrative that they're kind of driving in terms of how much they're watching the labor market. And it can seem a little bit counterintuitive, right? Because you're like, oh, okay, there's, the unemployment data was strong, meaning that less people were reported unemployed than were predicted. And then all of a sudden you see the risk market start to tank, and people are like, well, hang on, surely that's good for the economy, strengthen the economy, more money coming in. The way that it's being looked at is that actually, while inflation's still a little bit sticky, a little bit above target, they want weak jobs numbers to really kind of encourage the Fed, or to kind of, give that incentive to keep the interest rates cutting. If we look at the projections this year for the rate cuts, the average market bet is on 2. Now, that was a lot heavier towards 3 last year, obviously, before we had certain situations kick in. So we want to just be aware of that, right? And it's something that we want to have plugged in. That's why the employment data is important. It was really important last week. However, what we're looking at here now is CPI, and we have PPI this week as well. So, you're looking at the consumer price index here, right? So for those of you that don't know, I'd recommend using Forex Factory. No endorsement, nothing. It's completely free. It's just that if you're new to this kind of stuff, or if you're just kind of trying to take it on board, you have these really handy folders down here where you can just look at the detailing, right? You click on these, it tells you what it is. Also gives you a little notice here, which I really like as well. Skip data release 2 months due to the US government shutdown. We need to factor that in, because as that data starts to come online, and live, predictions have already been made on that data. The market has already priced in certain elements of that. So if that skews, aggressively, then there can be a little bit of a heads up for us. But you can see things down here as well, like usual effect, greater, actual greater than forecast is good for currency. But good for currency doesn't necessarily mean good for risk. All right. So that's where we need to kind of put that in. But basically, what we're looking at here is, how much hurt is the average consumer feeling due to inflation, and then the producer price index, which comes on Wednesday. All right. Wednesday, we've got a whole bag coming in because we've got core PPI month on month, retail sales month on month. We've got PPI and retail sales month on month as well. And then we're getting the October data update on core PPI and PPI month on month. So let's, park those for the moment. Normally on the show, we're covering our kind of higher time frame views on these. These are really big catalysts, especially for intraday traders. But also when you're seeing these news and data start to come in around key levels, let's not forget we've got bank earnings as well starting to wash through this week. So it's setting the stage for something. I still retain my bullish thesis on 2026, more from a traditional market perspective. As you can see what I was sharing from the kind of latter part of last year, saying they expected a wind down into around about Christmas for risk assets, cryptocurrency, etc. Obviously, no stopping this train, as Lynn Alden would say, in terms of risk for, AI, the S&P 500, the NASDAQ, the indexes. They're all looking incredibly strong still, as are the technology equity stocks as well, microchip producers, etc. So let's just keep an eye on this anyway. We're not going to use it to derail us too much, but ultimately what's good for the goose is good for the gander. So as we look through that, we want to make sure that it's on our horizon, because if risk markets start to take a hit, technology stocks start to drop, and equities start to go down, then we could see ourselves in very, very difficult waters to get through in terms of crypto. So anyway, let's dive on to the charts. All right, so we're starting here with Bitcoin. Key areas that I'm looking for, I'm going to run you through these. So basically the grey blue boxes here form our range. If we just zoom in here, obviously we don't need to go back that far. We can see as we look here on the charts, what do we have? So support, right? And obviously similar situation here with resistance, right? Henceforth, why we were expecting a move back from here. By the way, shout out to TradingView, who have fixed my back button for this week's show, so credit where it's due. Now, if I ever see a point that the market's gaining clear support or resistance, it does make sense to just compress the chart and look left. All right. Often what you're going to see is a correlation or confluence with previous areas of consolidation. In something I'm always focusing on is, do they lead to large moves higher or lower, right? And what we can see here is nice consolidation here, big rip, another consolidation here, another big rip. So as we look across, we can see the lower part of this consolidation before we got this initial pop here that was then retested. So what happens is the market's moving from fair value or balance or a range or consolidation, impulse, right? This is when the market gets out of balance. We look for these inefficiencies in the market here. If the market starts to consolidate, then it could be the case that this is now being accepted as fair value for that asset, right? In this case, Bitcoin went from an area around the mid-80s, large expansion into the mid-90s, and then buyers ultimately supported it here, driving the price up as we moved higher. So as we look at that and we move across, natural position here. This is where buyers dominated the market. When price returned here, we look to see if those buyers are still able to exert any kind of control. Camille, welcome, my friend. And they couldn't, right? Let's just look for a moment. If I just remove the drawings. Remember, we just focused on this consolidation here. Look at what the buyers did here. Price was in this downtrend. We had this larger consolidation here, a bit messy down towards the bottom. You get that sharp move into the lows that's quickly recovered. All right. Buyers stepped in, then took control from the sellers, right? So, hey, Whack, my man, how are we doing? Great to have you with us. If we look at this consolidation here, this is what drove the move lower. So either this is late market participants trying to short this move, right? Or it's the move of, you'll hear it as manipulation or accumulation, manipulation, distribution, or power of three. Either way, I find it cleaner to look at the areas where I think buyers and sellers exerted the greatest control over the market. And then when we return to those areas, are those participants still active? Do we have the passive orders to keep the market suppressed here? And if we don't, the aggressive buyers took control from the sellers, then this becomes the area I'm interested in. All right. So the same thing as we move up, up, and up. If we take our horizontal tool here, right? And then we can see this is exactly the area that we were just discussing. All right. So when price comes back to here, we can see that buyers are still engaged, right? Also, when we look up here, we can see sellers are still engaged. So when price came back to this level, look at the two different reactions. See how we started wicking into this absorption? Yeah. So price is finding buyers versus when we came and engaged with this area here, represented by the higher grey box. Look how price just sliced through it. Yeah. So see this move here, very quick through it. All right. Versus, if we put that back on, you can see here in, 1, 2, 3 candles, you're pretty much through this move and it continues lower. Here, the first candle that engages gives us a really long downside wick, showing some absorption and looks to pop higher. Jojo, my friend, how the devil are you? I was thinking of you this morning, Jojo, as I was looking through the COT report. Jojo, wonderful friend and member and team member of the Bird Nest with us as well, as Whack to Miguel. Wonderful members we've had for a long time. But yeah, Jojo very much on the traditional side of the market. So we were having some good conversations about those, and Jojo as well, very well versed on that and giving us the heads up this morning too that we need to expect bank earnings this week, which is very hot on the radar. And we, funny enough, just covered that before you popped on, Jojo. So what does this mean? Well, quite simply, the next move from this point, establish where price is reacting, wait for price to engage with that level, wait for some kind of reaction. I'm not the type of trader that likes to try and catch bottoms or tops. I like to wait for that initial move, see participants getting caught offside and wait for the momentum in the market, look at the dynamics of how price is being delivered to then step in or out of positions. And really, really simply for me, the reason that I wasn't jumping on this horny long train with a lot of people that were late into this, and I don't include a lot of people in that actually, especially, some of our amazing team, Just Pit, Trading Tank, all catching these beautiful longs within here, right, up to this level. But then caution here when we're smashing into resistance. All right. Yeah, bank earnings this week, a lot of Fed speakers this week, few spanners potentially coming into the work. So we have to wait and see. Now, what we can see with our volume profile here, and we're allowing for the whole leg in here through into the consolidation, is you can see really, really clearly where the most amount of transactions have taken place in terms of volume. All right. So for me, this is an area of interest because we've got this kind of low volume node area here. See where we've got the volume shelf here and here. Price coming in. Price is reacting in this area. I'm going to show you on the 4 hour what the playbook is for here, how we're looking to decant this down. But no plays on this time frame, right? I have got these arrows somewhere, but I'll just redraw them again. The arrows look something like this, right? Large expansion to move higher. This is really important. I don't want to see some tiny little close above here. I want to see the market participants that are keeping the market suppressed here. I want to see them blown out of the water or just, removing the offers. They can just pull the orders from the order book. And then all of a sudden, all of those passive sellers here go away. Buyers gain control of the market, the aggressor takes control, and then he pullbacks into these areas, then allow market participants to step back on board. If we see them violated and price steps back into the range, so we get something like this, then all of a sudden, we've got a playbook that looks a lot more like that. We do factor the point of control into this as well, though, right? So again, strong move above. If we go long here and it fails and we get back in the range, we take the hit and then we trade it back within the range. If we do break out from this and we, and buyers are willing to defend the position here, then that ultimately becomes the playbook. So I'm going to move this down onto the 4 hour now, unless anybody has any questions on that. Papa Powell really not backing down. His speech this morning. Yeah, right. I mean, I do feel sorry for Powell. Like, I do have a big soft spot for Trump. The reason for that, because I mean, obviously he's a twat, isn't he? But, being in the UK, you look at world leaders are never going to be good people. Typically, I think probably the last person you could throw that at would be Obama, who just had all the grace and the quality, the care, the way he carried himself was unbelievable. But yeah, I mean, look, you got Trump, right? I'd take Trump 1,000 times over some limp-wristed twat like Starmer. And I think, unfortunately, in this world, it's these are the type of leaders that you need if you want to get anywhere, as much as that on the humanitarian side, etc. Doesn't line up particularly well. But anyway, Trump wants good markets. We're heading into 2026, massive fiscal buyback from the US in terms of debt. potential quantitative easing coming in. We've got the situation with the tariffs that could lead to huge refunds coming in. The US, obviously, then any kind of tax relief that they get that comes back in. There's so many things that are keeping us interested in the long-term narrative. And, the best fund managers and that I speak to are all expecting a 2026 to be bullish. And that doesn't mean that you jump on board with these people, but these people are managing billions typically, certainly high hundreds of millions. And if they're looking to position themselves still in assets, still in technology, still happy to take AI, doubling down, if you look at a lot of them across the board, from Goldman Sachs, JP Morgan, all the information coming out of them in terms of gold and precious metals, I think that really sums up crypto. But precious metals, which is still looking quite strong. All right. Obviously, we need to look at the follow through from the Venezuela situation because of the control of the oil there. That's, whether you're looking at that as towards the AI arms race because of China's advantage in that being cheaper access to energy, right? Or you're looking at that in terms of it stopping the dollar debasement, or the dollar being the standard in terms of curtailing the oil companies. It's an unbelievable tactical move in that respect. But anyway, really, really simple playbook, as we can see here. All right. This was shared, I think, Wednesday's live show. And then we had start of the week as well. We brought this in. It was also shared again in the Bitcoin report last night, which is free to all members. And I do share mine on a Sunday night as well, which you can find on my Twitter profile, BC_Richfield. So here it was really simple. This is demand, right? A lot of people are going to be looking at this, as I was, because of this. Again, look, this really strong move that we got off this area here. Yeah. So price was kind of flattening out in here. Yeah, we basically had a ranging situation, and a pretty ugly one at that. All right, as price came through this level. Then this was the first impulse, really. This was of interest, all right, but it failed. This was the first impulse. It's a little bit grindy, right? But we started to take some microstructure in here, started to take the local highs. Then we took the swing here. Now, we failed to displace above it, which made it quite tricky. So made it very hard to be active, for me, for my system anyway, within this leg. All right, but then price came up and we consolidated. We then had the pop, and this here, right, is where I was a buyer up into these levels. Again, you can go back and check this, all shared. But this was a really nice, clean move. Why? Short consolidation, large pop. If this had failed and we got back under here, then what I would have been expecting is to head back down to these kind of areas here, stepping back within this range. Ultimately, we didn't get that, and price popped up. But look at the move here. We had a really nice, strong move away from this. So when we've come back in, we can see all the wicks in this area here, all right? And that's just showing us that buyers have stepped in again. However, it's not really enough. I'm not the type of trader that's looking to place limit orders in these areas, or ones that are looking to step in really quickly. You've got some exceptional traders out there, people like Just Pit that do that as well. I know Trading Tank, another member of our trading team, it waits a little bit more confirmation. But again, waiting for these key levels, and Pit will just scalp these like a man possessed. All right. For me, I like to see a little bit more confirmation. So what I'm looking for here is, like I said before, is for the market to just tip its hat here. And I'm either looking for this expansion for price to return to the inefficiencies within it. We can measure that using low volume nodes, right? For example. Yeah. So taking the low of the consolidation up to the high. All right. And you can see what the market gives us in here. All right. See this area of low volume? I know the purists in that as well, and I do use other charting platforms for volume. But TradingView can be a little bit, well, it's definitely less accurate because of the tick data or lack of tick data, but you can still see this, still perfectly fine, in my opinion, to trade from. Anyway, you see price return to this area here. This is the area that we want to be involved, right? Or I want to be involved. Either that, or I'm looking to trade this consolidation on a slightly lower time frame. All right. So waiting for price to come across onto here. We're setting our range. We know where the highs are. We refine that on the lower levels and looking for these breakouts. So that's why we're just passive at the moment. I set a post out this morning just saying to people, look, just remember to stay patient at the moment. These type of moves, especially when they come into a thin book, where you're looking at Sunday night pump here, stepping into Monday morning. Yes, we're getting some pre-market action here as well. But, typically you can see, weekends, right? That's why I went straight back to here. You can just see it, right? Normally a little bit of low participation. You can get some big moves because you've got low liquidity, right? So you can get some quite fast moves. But I really want to see, where major players are positioning themselves and if they've got interest in the market at the moment. So anyway, long story short, the playbook is identical, We're just going to move these along a little bit. Playbook is strong move above here. I want to see this high taken because I want to see the buyers probing into these highs. I don't mind. In fact, I want to see a pullback here. I'd be, in fact, relying on it. Why? Because it just makes sense. Look, keep probing into these highs, price keeps selling off. So I would think your intraday or your lower time frame traders are going to be targeting this high. So it makes sense to see something just pull back into here. Professor G or Dree, apologies for my horrific pronunciation of your undoubtedly beautiful name, but very much welcome to the show. Hey, great to have you with us. So as we see the large expansion above here, we just want to know if the bigger market participants are going to support this, right? Because if not, look at the flushes we have into the highs, mean reversion, flush, reversion, flush, reversion. So we want to see this hold in here. Obviously, the stronger the body close, the better. So if we, again, just look at this small consolidation, if we look at the demand candle here, look at the body of the candle that closes above it, right? It's showing impetus, it's showing commitment from buyers. Again, I don't like taking this until we've had this expansion, but this is what I mean by momentum, these fast moves. And obviously, look, we had one here, and this is where your high time frame comes into play, right? So if we just hide this for a moment, and we're looking here, and we can see quite clearly we've taken out these highs, we're stepping into an uptrend here. We've got beautiful expansion. We've got targets that we can retrace to or breakout targets that we can jump on board in. Yes, we had another expansion into here, which was really nice, but you're just expanding into all this resistance. So henceforth, when you see these rejections here, if you're looking at this from a point of impulse, right? Again, I like taking the expansion leg as well, the impulse here. And you can see price coming up, then it starts to consolidate within here. When price then starts to break down, not so interested in this. This would be more of a reversion play for me if we hadn't closed so far towards the POC. But I'd be monitoring this again, just looking for that displacement. Bang, 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 quick candles out, small gaps being left on the displacement move lower. And then in an intraday basis, we know where the next area of demand is. So we're just trading this at the moment level to level. In terms of the higher profile, higher time frame plays, this is what I want to see here. I want to see some commitment and some momentum coming into the market. Let's go and take a look at Ethereum. Excuse me, so I guzzle some tea. Yeah. I mean, quite a nice simple playbook here as well, right? Let me just take you back out to the daily so we can get some context on this. Okay, let's get rid of this for a moment. I'm going to draw this all in for you anew so you can see it all. This is really simple as well, but like I said, we'll just do everything fresh so that we can take a look. Whether you're using volume profile, for example, as well, if you're new to that, you're just looking for your key support and resistance, right? Let's just use this as an example. As you see price start coming up into a key level, focus on prior expansions. Basically, if this is the area that price is moving from fair value or balance to out of balance, it's either trying to create fair value at a higher price, meaning that participants are willing to hold that price. Yeah. Look at what happens in everyday life, right? Look, post-COVID, the price increases that went up, the problems we have with inflation. Well, one day you're paying 50 pence for a can of Coca-Cola, just for example. No sponsorship, of course, right? And then the next day, it's 80 pence or 80 cents or 80 yen or whatever your currency is, right? And then you're kind of like, oh, okay, you can get these spikes and then price comes back down. But when price gets accepted at a certain value, so you had this price, Coke was 50p here, now it's 80p here. What you can see here is that market participants aren't willing to go higher than this at the moment. And anytime it goes lower, they're snapping it up. So you see Coca-Cola on sale for 70p. And you're like, do you know what? I absolutely love Coca-Cola. I don't, by the way. I mean, obviously it's delicious, but it's hideous for you. But just as a popular example, and as we're looking through here, they're not perfectly aligned, but you can see as price is dipping in, people are buying this up on sale. It's what we know in trading as a discount, right? Versus people selling up here, which is premium. Yeah, meaning they're getting the highest possible price within current market value for their Coca-Cola. And you'll get some industrious mofos that will be buying the Coca-Cola for 70p and selling it back to the market, at 80p. Right, and then this just trades off like this. But this ultimately here is considered fair value, all right? And then what you often see with these type of moves like we saw here, deviations, you've got this creation of a range. Price steps back into the range, trades the far side of the range. Now, this is where it gets interesting, and this is why I like waiting for these momentum moves, because here I'm thinking, hang on, price is breaking down out of this range. So before we take on board all of our fundamentals, the news-based drivers, catalysts, which is so important because that's what causes these moves. First of all, I'm looking back here and I know I've got a key support level. Look how perfectly it comes into this. Again, squish your charts up. Look at the key areas. Where's price finding support consistently? And where does that support lead to large moves or these large absorption wicks? Anyway, even without that information, we can see the consolidation here and price has moved lower. If we take the expansion leg here, right, first of all, you can spot this without the volume profile. There's these large gaps, these inefficiencies in the market. If we take it from here up into the high, first high here, second down candle here, right, we can see first of all that we've created this range, which acts really, really well. We'll draw this further across as we start to develop the range. But we can also see that within this and within this inefficient move up here, we have these low volume nodes, all right? So these areas that we can target, and we can actually see here the highest of this, or the first of these outside of the range here is the one that price just dips into, and slightly into this lower one here, which is actually our area of lowest volume, apart from these almost basic zeros down here. And this is where price comes in. So we can do one of two things. You take that into consideration. Also, as well, remember, if this is the current price move and we know everything up until this point, but not this, we take our range across to here, which is the information we would have. This is what gives us the conviction on the breakdown, right? You can use CBD as well, looking for absorption, all right? But look, breaks down. Now, let's imagine we didn't have this information and we're like, oh, okay, we didn't realize there was support there. Well, first of all, in this large move up, if we trade this as the breakdown, something that I like to do here, again, looking at these gaps, it's a very valid breakdown because we can see price has really moved below the area that we were seeing previous absorption. Now, one of two things is going to happen here, typically. This is going to be a breakdown from the range. Price is going to draw back to retest the range low, the inefficiencies, the low volume nodes within the move down, and continue lower. Or this is a deviation. Price is going to step back into our range here. We're going to look for expansion back into the range. Again, looking for these gaps. Then we're going to look to trade it to the high of the range. Here, we can see the difference when we got this expansion outside. Take it from the low of the expansion move because I want to know where it broke out of the range. Ultimately, you'll notice that I've finished it here because if we didn't have this information, before we had that, we would have then been looking at this candle here. No problem. We're drawing it forward onto this candle. As price continues up, start to see some absorption, seeing volume build above here. So price is starting to consolidate. Monitor this consolidation in here. And again, you're looking for a return to an area of low volume here, as we see we spiked into. Difficult with this one because you have to be willing to draw these profiles on the way up if you don't get a confirmed higher. If you'd waited for the confirmed high on this candle, you would have missed the return to low volume, right? However, you can draw this across, and we can see here the area higher. And if we draw it across here as well, this small consolidation, which we would look at on a lower time frame, we can see the value area highs here. We get that big push above it. See what I mean? Absorption from the low of the wick, driving price higher with a big body close. That's when we can get interested in these moves higher, all right? Just adding volume to what we've always used. So anyway, just as an idea for people, I had a lot of questions coming about that, and that's what we're going to apply to this. So first thing I'm interested in, if we look at our support resistance, our range that's formed, basically we can see resistance forming up here. We can see our support down here. So if we then want to add volume to this, I want this expansion leg lower. Looking at how price expanded back into here, found support. We can move this across and we can see here that we've got our range. Now, this is a tricky one here, right? Because I do like to really capture this expansion down, but we've got the gapping in there. You'll see that in terms of when this really started to break structure, it was really this move here. If you're somebody that wants to look at the leg all the way down, this is where I'm looking a little bit more in terms of the volume, right? So looking for this volume shelf to be held, looking for price. Look how well the point of control is acting as our midline here, right? So now we're above this area. We can gain the context that price could be looking to push up from here, which suits, the rest of our playbook, really, in terms of as long as we can fix this in with a range. Hey, brother, how you doing? Christophs, is it? Again, apologies for murdering all your beautiful names today, if I am. So we've got this range playing here. Now we can see with the value area high, this is where we want to be a little bit cautious. However, What I do like here is this move. Yeah, so we got the expansion from the low to the high. Price is now coming down into these areas, and we're holding this area of low volume, all right? So this is where we can start making plays from, potentially. What I would need in terms of taking plays like this, because look, on the daily, we've got market structure now, yeah? High, higher, low, higher, high, beautiful displacement above that as price then looks to come in and find support here. However, I like to see how Monday plays out. I want to see what kind of traditional market, legacy market participation we've got. We're moving into a week of big news. It makes sense to see how the major participants, the funds, the banks, the institutions that are deploying a lot of capital are looking to approach risk this week, because really difficult for cryptocurrency if we're swimming into a risk-off tide. All right. So on the daily, this is where we're looking quite nice. If I was looking to kind of frame this a little bit better, you can move down to like an hourly here, which I like to do from the daily. We can see we've got these reactions in here with price starting to move. Now, again, same principles here. I like this expansion move off the lows. I don't like when it happened, which is why that I just wanted to... sorry, Christoph, I'll get straight back to your question there, mate. This happened on a Sunday, which is why I'm not a keen trader over the weekends, all right? But had it not, again, we can use this move and say to ourselves, all right, move this back one. We can see where the lowest volume is here as we've moved higher, right? So if we're looking at this, we're kind of saying, okay, price has just kind of nibbled in here. So let's take a look at that. And then let's go back to our concept before, which is the idea that we want key areas we're targeting of support and resistance, be that a low volume node, be that, an area of demand, an area of supply above, whatever you're using, key support and resistance levels. You want to see them respected. You want to see, in this case, buyers step in and show aggression. So when price comes into and closes below, this then becomes an inversion gap. All right, as it would, which we've taught for a long, long time, right? Not obviously didn't come up with it. Most market strategies have been bastardized to some degree. So, there's the chart-based gap, the price action gap. Here's the volume gap. Both get closed below, meaning that we look for drawbacks into this area to act as resistance. Yes, they're aggressive plays to the lows. However, when we add the context, right, that we've rejected at a range high, for example, then that's the time that we can get involved. So with all this in mind, what does it mean? Well, if we've now broken this down, I now want to see a reason to be involved in this. I'd love to see a little move lower, taking out these, and then a real expansion move higher, and then returns from here. We could get some great opportunities trading this into kind of the value area high or the key resistance above. Christoph, let's have a look. Yep, there's a flag pan forming. I'd like to see is a one-to-one correction. Yeah, I can understand that. If you did that one on, so looking at this in terms of ETH. So same kind of idea really with you looking at ranges, flag patterns as well. It's an interesting one, this actually, because for a while it was looking like it was kind of forming a rising wedge. And again, if we get rid of the volume on here, what Christoph's here, apologies as well if I've got your name, Christoph's, if I got it incorrect, I've only got your username, is this, right? You can actually see through here, you got this quite nice rising trend line. It depends how you draw your trend line as well, guys, so it's completely up to you. Somebody that either does it by line of best fit, or you're somebody that likes to anchor these to a specific low or to a body, that's fine. The key thing in my experience with these is being consistent. So I'd kind of look at something a little bit more like that. Oh, okay, on the 4 hour. But yeah, I would also be looking at this here, right? Because we've got, if we look at the last point of support and we draw this across in terms of where we found resistance, you could see that this here is kind of forming a rising wedge. Statistically, there's a higher probability that you trade out of this, but any deviation out and back in, I think, has like a 72 to a 76% chance of then reverting. I would look to Axel Kaibar for that, by the way, CMT trader, probably what has the best set of statistics in this in the world, I think. But yeah, sure, we can take a look at this on the 4-hour, mate. Okay, so you'd be looking at it in terms of this, would you, then, Christoph's, that price has had to sell off here, and you're now looking for this consolidation within here, either a breakout or a breakdown. If we were looking at this on the 4-hour, yeah, and this is obviously off from the daily, we can obviously use the same principles here in terms of looking for the displacement leg. Yeah, so this is the leg that broke structure, low to high. So if I'm looking to put that in, I want to take that ultimately on the low that led to the break of structure, and then drawing this into where we are now. This is the high. We can see we're just rejecting a range high at the moment, right? So again, price being suppressed in here. So kind of like Christoph's saying, if you're looking for these flag patterns, then that would what we'd be looking for here. In terms of the volume, doesn't stack up, but this area here, again, if we start violating the areas of low volume, we can look for those to become inversions, and ultimately the buyers that are trying to defend price here and keep it supported, if they remove those bids, we don't get the passive buyers here and the sellers show enough aggression to punch through, chances are we're coming back down into this consolidation down here where the buyers were really strong previously. But yeah, it's a tricky one at the moment, right? Daily's nice and clean here because we've had the expansion leg up. We've now had at least a 50% correction here if you're somebody as well that uses Fibonacci's. When you're looking at this leg up, you can see we had that nice reaction here at the golden pocket, 0.66 to 0.618. We've also had that nice 50% retrace, which is, what a lot of people are looking for, algorithms as well. So you're on the right side of that premium discount that we were talking about earlier, buying cheap, selling expensive. Right, so what else have we asked for today? Actually, I want to take a very quick look, just for contextual purposes here, over at the S&P 500. Just to really throw in the context of, how bullish this is at the moment. It's quite an interesting one as well, because we've obviously, again, had this point of resistance up here. So, not to sound like a broken record, but as we look, yeah, we can see as we're going across these areas. All right, resistance, resistance, resistance. Again, we got a little knockback here as well. So as we look at it, I'm saying to myself, all right, well, where's the key areas of resistance here then? If we're just kind of, throwing a blanket, I hate charts and figures. If we're just throwing a blanket over this and saying, okay, well, incorporating the wicks from this initial rejection, which was the prior all-time high, price moves down, finds resistance, then this was quite nice, this move above, right? You might even want to move that a little bit lower to really kind of capture all the wicks, right? So looking at this wasn't, I was speaking about this with Taha, right? One of our traders over at the Bird Nest as well, and a traditional market expert as well, especially in Forex and indexes. We're talking about the idea of this breakout above here. And it is a bit messy. When you're seeing these kind of breakouts or breakdowns, again, we've got the momentum. So excited by this, looking for price to come back. And in fact, gave us basically the perfect entries in here from the ultimate point of no volume. Yeah. Look at that. You see the gapping within there. And you can also see the gapping on the chart. Yeah. Area of lowest volume, price drives into this. Beautiful. No, it's not the cleanest breakout here, but we were looking at price finding support in here when eventually, look, 1, 2, 3, 4 attempts now to just eat away at the sellers in here. And then when those orders get gobbled up or they're removed or the buyers show enough aggression to pump through, then looking for price to come back and find support in here. Really simply, if I'd seen price close in below this, right, this was our value area low from the range created from here. We're well back down below the point of control. And also this was the last area of low volume. So again, an inversion of this could have looked for retest and price ultimately coming in to try and make a move on these lows. We didn't get that and price is holding above. So now we know very well that price just holding above here is still looking bullish. We're higher highs, higher lows. Lest we violate this and close back down below here, taking out this low, we retain bullish bias on the S&P 500. We've got a similar situation on the NASDAQ as well. So ultimately, while the risk and technology heavy indexes are supporting the risk bid, then in my opinion, looking higher is absolutely fine. Looking at the volatility index here, the VIX, we're still below 20. All right, again, favoring risk on sentiment. We can see here on Friday, we had price correct back down. We started to grind up through the week, which put a little bit of pressure on risk assets, all right, but that's still holding while we remain below 20, as long as we're not seeing these sharp aggressive spikes up, which are not, increased volatility normally means, crypto suffers for that risk typically as well. And then we look at the dollar index. Dollar index is coming back towards the midline here. All right, again, had a really strong breakout here. We saw that from just before the Christmas period, a lot of strength coming back into the dollar. So now just seeing if it's going to hold in this upper range. The correlation between the dollar and risk assets has been a lot stronger recently, where it really, any correlation does slide in and out, right? So there's not just one set of golden rules that you can put across everything. But it's really important to know these because, typically while we're seeing strength in the dollar, it is going to put a little bit of pressure onto risk markets. Obviously, gold's in its absolute own world. What a trade this was, just a breakout from this tiny range. I mean, so a friend of mine who used to work for Goldman Sachs, where were we back here? This is it. I know why, because it's on my other gold chart, but you can see it clear as day here. Right. Sometimes things aren't as difficult as we make them for ourselves, right? If you're looking at these consolidations within here, even if you're just focusing on the ultimate points of resistance, because then you focus on the ultimate points of support as well. You're not just walking in here with some one-sided trade plan. Yeah, you're saying to yourself, all right, what's controlling the market? For me, here it was this, because it was this consolidation that led to the big rip, price ultimately staying within this range, but setting higher lows as it came into the pressure, and then we got this big rip back above. Now gold, smashing the highs again today. Commodities are strong, fueled by a lot of things. The dollar debasement argument, the move for companies, funds to, own something that isn't quite so open to the turbulence that we've seen with other stocks, or from denominators as well, like whether it's mixed with the US dollar, etc. This is a hard physical product that people can stack. And that's where we are. In other terms, looking at the Mag 7, so this is, for anybody that doesn't know, this is Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. We're looking at these to offer us some confidence as well as we step through, all right? Are we seeing strength hold across these assets? If we are, collectively, bearing in mind how they play in to the S&P 500 and the NASDAQ, then again, it's something we're looking at a reasonable bid for risk. And I do like looking at Aussie JPY and New Zealand JPY as well. Again, risk on currency pairs against, so high yielding, low yielding currency trade-off. I know we've got slightly different situation at the moment with the new approach from Japan, but, these still hold pretty true for me if we're looking. And again, traditional markets really can be so very clean in terms of these breakouts, retests, price trading away. But just looking for these to retain strength. At the moment, it's a little bit of a mixed bag, but I see that we've got room for risk to breathe. And I think that's going to be absolutely fine as we look forward for the day ahead, for the week ahead. Sorry, the caveat here is making sure that we don't get any major impact hit us from CPI, all right, and the data that's coming through. So we do want to keep an eye on that. Someone did ask me for Solana as well. I think we might have done it on now. So Sol's an interesting one. We kind of took out the lows of this consolidation as we moved in, stepped back in the range, which was a really, really lovely trade. I didn't catch that trade. We got the support resistance level coming through here as well. Just going to tick all that off for a minute so it doesn't become a distraction. Just use exactly the same principles we were looking at before. This is the leg I'm really interested in. Look at the gapping in the way down. This is where buyers tried to step back in here. Price moved up into this inefficiency, sold off aggressively. So I want to monitor what's going on in this leg across here. We can see we're kind of at the range highs at the moment. We've had that little battle, but we're above the point of control. again, this was really nice because price stepped into here. Now, when I use volume, this is the fixed range volume profile. I do also look with the value area high and low to see if we have any areas of high volume. Now, remember, this is the current price, right? So before we had the breakout of the bottom of this range, which we did here, we can see the price came back down, closed below this little volume shelf, telling me that price wanted to push lower from here, which was fine here. Yeah, shorting those moves because remember, so we've got the range here, just a range low retest. We didn't really get that displacement. However, here, when we were back in the range. When we moved above the point of control here, we had this beautiful expansion into the range highs. The reason I'm mentioning that is we can see, obviously, now we've traded a bit below this. We've got this area, this volume shelf here as well. So I would also be including this, right, as the range low. Because we could easily just spike into this and come back, but I want to see a displacement move, a higher momentum move down below this to look to really get short on this on a daily basis. At the moment, I quite like this play here because we can see that we've had that expansion. If we look from the low to the high of this move, really, really aggressive. Range low reclaim, straight up to the range high. Initial kind of tickle away from that, but moving on. Christoph, 5 waves up, time for correction. Nice. So you were an EW guy. Yeah, I used to trade a lot of EW back in the day. It was really, really effective for a period, early stages in crypto. It's scalping that using that moving average and VWAP retests and reclaims. We had some brilliant strategies back then, the really early, super volatile days of crypto as well. Suited EW trading really, really well. So, and again, you know, you've seen the absorption come in at the highs, right? But what I do like about this is that we've had this expansion. Now we're getting this consolidation. So while I look at this here, right? So this is the volume profile that allows for this leg higher. All right, I'm just gonna get rid of that for a moment. Yeah. So we can see up here, right? If we look at this level, even if you're not using volume, right, look at the downside wicks here, price coming in, finding buyers. I'm focused on these. So I say to myself, all right, I'm going to take the highest of these wicks, yeah, which is here. And then I'm going to go down. And actually, I quite like this here because you can see the wicks really kind of hitting into this area as we draw it across. And I've just anchored it to the bodies. If I then draw that back, we can see it also has some relevance here. Again, these areas are never going to be precise, but we don't want to see these tiny little closes. You want to see these high, you know, aggressive moves. Yeah. So if I draw that across here, then that's my, you know, that becomes my range. Yeah. Obviously, we can then use volume. But anyway, this here is tricky because we're coming straight into resistance. But I like this move because looking at the impulse move higher, yeah, we've had this price dip back down into this perfect low volume node. Price expanded up. We've taken the high now, failed to displace above it. So now what I want to do is incorporate all of this across, right, to where we are now. And this now gives me the range. So now I want to see a strong breakout of this range, perfect, which also aligns with this range high. Yeah, we can also take, especially more relevant on the lower time frame, you can see this nice balanced profile here. Not perfect, yeah, but it's quite nice actually in terms of the distribution on this. See, nice and fat in the middle and tailoring away at the ends. But this plus this gives me a really nice playbook here on Solana to see the breakout. Price come back down into this area here. So we get the breakout of the range, we get the retest of this area here. We want to see price drawing back either to an area of low volume or a retest of what was previously resistance, and then we can trade that higher. But yeah, I would definitely agree, Christoph's with you there, my friends. For your EW guys, especially, I would think on the 4, this could look, yeah, 1, 2, 3, 4, 5. Would you look at this because you've got that kind of failure there on the 5th wave, although it could be a 1, 2, 3 corrective down. But yeah, it's been a long time since I messed about with Elliott Wave, I have to be honest. Right, legends. So unless anybody's got any chance and want me to throw up and take a look at, throw up on the screen, not literally physically vomit them up, then I think we pretty much covered everything for today. Like I said, very keen to see how the range plays out today, see if we do start to get these breakouts. We've got, what do we got at the moment? We've got 40 minutes now until we have the pre-market, all right? And that means we've got an hour and 40 minutes until we get the equity market open, all right? So then that's what we're going to be looking at across there. That's obviously the equity cash open for the US markets. Going to be looking In terms of the playbook for today, just out of interest for any of you that are maybe more on the intraday side like myself, yeah, this was really interesting here. We can see this was the leg. Yeah, I was really, really interested in this, to be honest. Looking at this pop up here on ETH and then seeing how price reacted here, we can see that beginning of London, price did come into this area of low volume here, at which point we kind of broken down outside of this range. Yeah. Again, really, really nice for all the volume. Big displacement move, retest, back down. Now, the reason I quite like this play is because we should have violated this with a bit of momentum, in my opinion, if the buyers had aggressively stepped in here. So when we saw that, price failed to get that move and we drew back into here, this is where you're then looking for absorption to trade that lower. So with that in mind, what's really of interest for me here is this last move down here. Actually, I'm going to look at this more on the 30 minutes because we've got this nice displacement move. So from here to where price is here, if I want to see this move higher, then playbook's actually quite simple. This is intraday as well, guys, right? In terms of looking for scalping, we've got a nice draw up here. All right, we can see price coming back down into this kind of support resistance area here as well, right? Because we can see, you know, the higher the wicks in here, price finding resistance here. Yeah, we had this large move above it here, but look again, if we draw this back, support, resistance, 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 resistance. What do we get? We've got that nice higher momentum displacement move that took us above resistance here, retesting in small consolidation breakout plays or returns again to the gaps. So with this one, I'd just be looking for breakout plays of this. I think if we get ourselves a high momentum move above here, a little bit cautious about this area of low volume here, right? So I would wait for confirmation retest of this before trading it higher. Again, because of this, we do want to see that taken out of play, certainly rebalanced, and then strength to step back in here. And look, aligns with these beautiful upside wicks where we saw the absorption to the downside. If I was looking to trade this lower today, then I would want to see aggression from the sellers here winning out and then the inability to get back in. And then would be looking to target these lows in here. All right. And then obviously trading them down as we go. All right, legends. I like ETH here. Been moving pretty clean. We've had some nice kind of intraday trades on that. Not much of a traditional market crew with us today, all right? So I'll save the ES and NASDAQ plays for later on and for the members when we kick live trading back off again tomorrow. All right, everyone. Well, look, thank you for tuning in and listening to me rattle on about the markets. Obviously, none of this is financial advice, just an insight into my own trading plans, ideas, and methodology. And I hope to see you all on Wednesday for our Alt Request Wednesday. All right, so if you've got any charts you particularly want me to take a look at, please do bring them along and I'll take a look. All right, have a fantastic week ahead, everyone. I look forward to seeing you all out there in the trenches and around the nest.